Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Monday, April the 2nd, 2018. Hope everybody had a wonderful Easter weekend. It is the start of a new month. It is going to be somewhat of a quiet session today as the European markets are going to be closed. Well, I think it's going to be a quiet session, but we'll get into that in just a few minutes. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating in a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So jumping right into it, let's take a look at the news. We've got RBC manufacturing PMI coming out in Canada in 44 minutes. 58 minutes, we've got manufacturing PMI from the US. 10 o'clock, of course, is going to be the big news for the day. We've got construction spending, ISM manufacturing employment, ISM manufacturing new orders, ISM manufacturing PMI, that's the one you're going to want to keep an eye on, and ISM manufacturing prices. 11:30 Eastern, we have the 3-month and 6-month bill auction, and that's about it for the day. Just take a quick look at what we've got overall this week. Tuesday, we've got Red Book, ISM New York business conditions, 4-week bill auction, got all-day car sales and truck sales for March. And that's it for Tuesday. Wednesday, we've got ADP non-farm employment change. That should be the big one for that day. We got Bullard speaking at 9:45, services PMI, durable goods, factory orders, ISM non-manufacturing business activity, ISM non-manufacturing employment, ISM non-manufacturing PMI. Got crude inventories at 10:30. And then Thursday, Hong Kong, the Asian markets will be closed. 8:30, we've got exports and imports, initial jobless claims. Not much more there. And then on Friday, we've got non-farm payroll, unemployment rate, employment change in Canada, IVPMI in Canada. So not a real heavy scheduled news week, but of course there's always the wonderful headline news that seems to come fast and furious at us. Taking a look at Friday. Friday was basically a balancing day. We were looking for basically another balanced day, closing out the week, going into the weekend with an upward skew due to people, closing out the month, closing out the week into a holiday session. Got a little bit of a sell-off near the end. That's just people covering. So really no real information on Thursday. I should say Thursday, not Friday, because Friday was a holiday. Overnight session again was rather quiet. Fairly small range for what we've been seeing lately. We just got a shift of the VPOC down here to the 26.31, but overall the inventory is pretty balanced. I would say we're basically about 60% net short in time and volume, but it is pretty balanced. And we went down and and hit that 28 and bounced right off of it, which is significant because that was right at uh, uh, Thursday's value area low, and we bounced. Taking a look at the macro to micro, we had an inside month. We came down and tested the 9. We dipped down twice, but notice that we did get a higher low put in the monthly, and we had 14 months of one time framing up, and then we had the February where we dipped down below the 9 and violated the one time framing up. Then we get this inside month, and we're holding so far the 9 EMA, and we're losing some slope and separation. So there is signs that the longer time frame is struggling, but we haven't violated. We won't violate this upward trend. We can go all the way down to the 2400s, the mid 2400s, before we even violate this downward trend. Going to upward trend. Going to the weekly, though, we have another inside week yet again, but the key point is that we are below the 9 and the 20 on the weekly. We do have a naked cross up here at 2706, but right now we're, for the last 2 weeks, we've broken below. Now we've had 4 weeks in this consolidation area where we've had inside weeks. So we're consolidating and we're showing a little bit of weakness, but neither side is taking control and have been able to hold the control throughout the longer time frame. So, but we are below the 9 and the 20. We don't test the trend change from below until we get up into the 26.88 and a quarter. Going to the daily, you can see that is the case on the daily. We spent last week down in the start of a possible downward trend, and so far we're holding. The key level above us is going to be this 54. Remember that 54 was a key level for us, 54.75. It was the former value area low of the longer time frame. So going to be watching that area above. Going to the 4-hour, and see that we're just in this great big huge consolidation for the last 4 days, and nothing really has changed. We're just going sideways. And then going to the 30-minute, same thing. We're below the 9 and the 20. We see some weakness coming in, but neither side is really taking that much control. So if I open the bigger picture and look at the structure, this is what I was talking about. We've had the 6-day. Now, notice that the microcomposite VPOC, when we came down here, was up here in the 2660. And then on Wednesday, it shifted down to the 13 area. So we were watching that 13 area to see if it would hold on the Thursday, and so far it has. So this is going to be a key level for us. It's 2613 to be exact. Just the scale's a little off because I'm having to squish it to fit everything on. So that is going to be our over-under line today. It's going to act as our over-under line for probably the next couple days until we see the shift up. But as we stand right now, we're holding that level, and the buyers have stepped in down here and held us up. And we've got a microcomposite LVN at the 25.75, and that's going to be a key level for us as well. That's going to be our warning line. Below that, I'm looking for them to come down and retest this 13. And if this 13 doesn't hold, I'm looking to come down and test the value area low and the 2600 again at that CLVN and microcomposite value area low at the 2601 and a quarter. So taking our levels from overnight, I did have our overnight VPOC above, but it is shifted down to the 31. Our overnight low is just below that, which, as I mentioned earlier, is sitting on top of the value area low from Thursday and a key LVN from Thursday. Our overnight high is all the way, that should be overnight high, not overnight low, at 41.50, and our overnight low at 28.50. And we're coming up into what is the, let me just bring this to the front, which is kind of a double distribution LVN here at the 33. Our month open and week open is 26.35. 25, as I said, is going to be a warning line for us. Actually, I'm going to get rid of this. This is going to be our warning line. What do I mean by that? I mean that it is where we have to start thinking that we're going to see a bigger move down, back down here to the 6-day microcomposite VPOC and what will become our over-under line for the next few days with Thursday's low and that naked close that they left down here at the 2608. Below that, 2601.50 is going to be our key line in the sand. And if we don't hold that, I'm looking for a move down to this 89. And this is no longer going to be valid. We've got the former microcomposite VPOC, the longer time frame down here in the 25.89 area. Above us, we've got Thursday's VPOC and the overnight high and a value area high. There's a little bit of an LVN here at the 50, so I'm going to be using that. Remember that this 53.75, I'm going to incorporate the 54 into that as well, because that was a former area that we were watching. And then the 45, was it 45.75? 45. The 45 even is the value area low over the longer time frame. So that's going to be a trade area for us just above the VPOC. So what am I looking for? I'm looking for a quiet day. I'm looking for another balancing day. But basically, I think we still need to test down to that 13 to make sure that the buyers are still in control. So my Hypo 1 and my Hypo 2 are both balancing days, one being a downward skew, one being an upward skew. But Hypo 1, open auction, in range, in value, a push up into the overnight high and the VPOC, find responsive sellers up there, rotate us down through to the overnight VPOC at the 2631, chop here, and then push down to this warning line, chop here, get a late day probe down towards the 13, but base down here and come up and basically closing somewhere in the 2635 area. That is Hypo 1. Hypo 2 is the opposite of that, but again, equally weighted because I'm looking for a balancing day in this area. Open auction, in range, in value, a push down, take out the overnight low, come down here, chop at the 25 area, get a push down into the 13, find responsive buyers down here, rotate us all the way up through to the 45, and basically chop and go sideways and close somewhere up here in the 45 area. That is hypo 2. Hypo 3 is a open test drive. Failure to take out the overnight low, find buyers right away, push us up through the overnight high, come up here, chop around the 40, 44, 45, and then break higher and push up into the 54 area, test the upper value, and then break out and push through the 26.59 with a target up here in the 60. Where was it? I didn't mark it in the chart, did I? No, I didn't yet. In the 60, 65 and a quarter. That is hypo 3. Basically, just chop, find buyers early, and then push up and start the move, the walk back up on the current longer time frame trend. And then hypo 4 is an open drive down into the 25, chop here, fail, push through to the 13, chop here, fail, and come down and test the 2600, maybe a late day probe down into the 95, 93 area. Our 20 period daily ATR is still running at 46.14. So we do have capabilities without expanding the average true range right now up into the 74, 75 and down here to the 25.93. But I'm expecting more of a quiet period because of the holidays, but you never know. So that's what I'm looking at in the ES. Taking a quick look at gold. Remember, gold is rolled over now. We're now trading the June contract in gold, and basically, we're still holding this 32 area, which is the microcomposite VPOC. We did not, that 14 area from the April contract is shifted to the 19. We're holding above that after balancing there for a few days a couple weeks ago. They made a beautiful run up into what was that 57, which is now shifted to 62.7, and we're starting to work our way back. We're currently trading just above the CHVN here. Key one to watch out for is the 41.4. If we can get above that, I'm looking for a move back up to 45. If not, a trip to the value area high on the other side of this balance up at the 1350. And then if we can get above that, back to where we just tried to hold value last week before falling off on Wednesday and Thursday. Below us, watch the 34. If we don't hold the 34, likely get a move down into the 32, if not down to the 26. And then that 19 area becomes our key line in the sand below still. But we're holding that nicely. A lot of people are looking for gold to break down, and I'm just not seeing it yet. It looked like we were going to get the breakdown when we were dipping below the 14 in the in the April contract, and we keep bouncing back up into the 30s, and here we are trading in the 38 in the June contract. So I'm looking for more continuation back up towards the 50 level. So that's going to complete our pre-market session. As always, trade well, trade safe, and catch you on the flip side.